everyone. Thank you all for joining in. I just wanted to speak for a couple of minutes and I'll keep this as a dialogue. I'm here, okay, to answer some questions, okay, which you may be having. And I know, okay, there is a market on and there is a settlement afternoon, but I just wanted to speak a little bit about what the market is doing. Trump has come and done his things, right? And was speaking, okay, to my people in the VMR also a little while earlier, and I did mention to them that what has happened yesterday is not a 1 day or even a 1 hour or a 30-minute thing. The tariff, okay, the policies, okay, which are coming in, those are market moving elements, and they are expected to play out not just for one session or two sessions or one series or two series. They'll have ramifications over the next few months, maybe a couple of years also, right? So we are living in an important phase right now. Lots of things are happening. The global world order, as we know it, is shifting right under our noses, right under our feet. Things are changing, and I want all of us to be alive to what is happening, right? Today is settlement day, and what really happens in the settlement day, the typical Thursday or any other settlement day, the option market volume takes precedence, and whatever is else outside, okay, you can say, okay, Trump said a few things, and the economy is saying a few things, and the policymakers, okay, would say different things. But in the world of markets, in the world of derivatives markets, existing positions or existing volume, okay, which is being held by market participants, that holds precedence over everything else, right? Over those positions, okay, whether they hold or whether they fold, that determines, okay, how the tape is gonna play out for the rest of the day. So I'm just gonna talk to you about charts, and I'm gonna keep it, okay, very brief. And if you have any questions, do bring them, because this is meant to be a Q&A. So a quick look at where the market is, where the tape is, and I will just arrive at an understanding for what the settlement is planning to do or is planned for the next 2 hours ahead. But what I'm going to speak to you about is got implications for the way trade is going to flow tomorrow, and the way, okay, it is going to flow for the duration of the coming week, and indeed this entire series of April also, right? So earlier the open, we had a gap down open, and that gap down open did not sustain because we did not see any kind of initiative selling on that gap down. There was a little bit of panic in the first 2 or 3 minutes where some previous longs who held yesterday, some longs, okay, who held the positions yesterday, they closed off in the morning, and that created a small kind of a situation in the morning. But beyond that, there wasn't a lot of supply coming into the market, right? So this is the order flow chart, and this happened at the open, and it's important to understand what really happened over here at the open, because I've been speaking to you about that level of 23,280 in the futures, and that's an important level. But early at the open today, this is how the tape played out. So yesterday we were around that 23, 420, 430 zone, and there was a little bit of panic in the morning. Some reds came here. This is some longs uh, closing positions, right? Some longs, okay, who got caught upside down, they closed positions, and the caught, okay, did what it had to do. But that was just the first 5, 10, 15, this is actually the first 10 minutes only, 9 minutes out over here. But the important thing over here is in the gap down, there was no IS, there was no initiative selling. What we saw, okay, was some longs winding up, and within the first 10 minutes, okay, there was evidence of longs coming back into the market, demand coming back into the market. The cot went green, and the cot, okay, was dominantly, okay, green at the close also yesterday. Today's event, the gap down, fueled, okay, by those by that Trump tactics or Trump impact effect, whatever you would call it, brought the market down. But for the market, okay, to continue going down, it needs supply. What kind of supply it needs? It needs initiative selling. So I mentioned this a lot, okay, on my Twitter feed also, and I do, okay, mention this as part of the process we follow. A gap by itself does not do anything. The gap has to be followed. A gap down has to be followed by initiative supply or initiative sellers coming into the market. Did we see any kind of initiative sellers today? Absolutely not. Okay, the market gap down. The demand okay came in after that initial panic, and the market okay shot up. We got an IB candle also around this 23,360 zone, and the market went up to about 23,409. Now, what is this 23,409? This 23,409 is the, if you look at that market profile chart, and this is the market profile chart coming on your screen right now. This 23,409 is the pink line over here, and the pink line is the volume point of control. Is it a random level? Absolutely not. This is the zone okay where the market traded the maximum volume yesterday, and you can see the market went and touched it, and it tested it in the C period, and that was it. All right, we don't pay a lot of attention to what happens in the C period. The C period is a move which happens to people who are late in the game. They come and they start thinking, okay, that the market is going up, and they start building some long positions over here around this zone, and they get trapped or they get caught out, and they do not understand the way markets function, and then they are late to the game, and everybody who's late to the move or late to the game is due for punishment. That is just the way okay the market works and the way the markets run. So this okay was not to be treated as a long, but the market okay did not show us okay that it wanted to go up about 23,410, and I tweeted it in the morning also that the long okay of the long move, we went long over here via 23,000 calls early at the open, and it was done here when this was tested, and now this market is now trading around this green and pink line, which is the current day profile, which is the VWAP and the depot zone. Now there's an important point over here to make. When this green and this pink are together in a market profile chart or an order flow chart, that's a sign of a market which is flat or sideways. But if this market starts breaking this VWAP, we are expecting a visit to the back of these lows of 23,280. In fact, all of us okay in EMR okay we are positioned okay to ride the market via long puts, because the market has not given us demand of longs coming back, has not given us evidence of demand coming back into the market. How do I know that? This is not an assumption I make. I go by data, and the data on the charts, I look up that 30-minute profile, the data on the charts, the 10 bar as the market probed up, this 10 bar okay is red. Yesterday at the same level, the 10 bar okay was green. There was a lot of greens okay coming in over here, but today I've seen zeros okay on the demand side. I've seen okay this bunch of stacked selling coming up over here on this 344, 83, 658, 228. Supply overcoming demand strong and convincingly over here. So this tells me okay that the market does not have fuel okay to go up higher. And if we get initiative selling back over here below this VWAP, we should okay test back these lows out over here also, right? So this 23,280, this 23,280 zone okay which I've been speaking to you about is actually a zone from the month of March. In fact, okay, it was the 20th of March. If I go back okay to that profile of 20th of March, we saw a lot of initiative buying. Now this is actually okay the continuous futures, but around the 20th of March okay we had a lot of demand okay coming up over here, and IB30 candles coming up in the same instrument of that March future. So this is why okay that 23,280 zone okay became significant for us. If you do an apple to apple similar kind of a comparison, there were a lot of IB30s okay which came up okay around that zone on the 20th of March. And if you want to okay actually go back to any single profile of the chart and you don't want to tax your memory, you can just pick up this date and time and just choose any date okay to see what the market did on that previous day, and you can quickly find out okay how the market okay was trading volume on that day, right? So this is okay the futures chart. Now what I want to basically okay focus on for today's session is because okay it is a settlement afternoon, we want to look at what the option market is doing. And what the option market is doing is always okay evident in terms of this option volume chart which is here. Now this is an MTM volume chart, near term money volume chart. NTM, and it will take into consideration the closest 3 to 5 strikes which are here. Now on a Thursday, this is gonna start behaving like this a little bit differently, and it's gonna have these erratic spikes. Now this is because volume is going in from the current contract, which is the 3rd of April, into the next contract, which is the 10th of April. So as that change happens, and big institutions, they do not hold onto positions till about 3:30. Some of them are already moving that position or that bias from the 3rd of April to the next series, which is the 10th of April. So you'll see these kind of spikes coming in, but you got to pay attention to the highs or the lows, whichever you want, and see this as a pattern. This will continue till about 3:30 p.m. today. But broadly speaking, what it does is it tells you where the call side is covering or adding longs and where the put side is going. And as long as the green is over the purple, you can say that the buyers are more dominant in the market, right? What we want to do over here is we want to open up a futures chart right next to it. And if you want to understand the bias, open a futures chart right next to it and open it up in the 30-minute time frame, this period right over here. So now what you have on one screen is the at the money, near the money option volume and the futures volume on one screen. And together they can tell you, or they can give you a very good understanding about what is happening in the market. The rules are very, very simple. As long as the green is over the purple, you can say the buyers are in control. As long as you see IBs over here, and this 10 bar chart is a little bit on the green side right now, it's actually flat, you can still say buyers are dominating in the market. But the minute this switches, the purple goes above the green, and you see something called IS over here, initiative selling patterns, specifically in the 30 minutes, then you can say that the market is due for a shift and there is a change happening below the surface. Right now, when I talk to you about a certain move which is coming, or I'm expecting a move to come into the market, we don't know for sure what kind of a move is coming. Okay, when I make statements like on X, I just mentioned over here that there is a due move due, because yesterday was an inside day, today is also an inside day, so we are in the middle of a balance. We are in the middle of a balance, and the market cannot remain balancing for a long time. There is a lot of things. So this is all an inside day pattern coming in, right? This was an inside day. This was a dominant seller, and you can say this was the VWAP of the 1st of April, a VWAP dominated by supply, by sellers, and we've not traded over this VWAP for the past 2 sessions now, today included, right? And this entire profile is within the supply dominated profile of the 1st of April. So these sellers, from a structure point of view, from a structural point of view, are still dominant, and you can say that they are having a upper hand. Can you action on them yet? Not yet. Okay, but it will change when there are initiative sellers coming into the market. The market is quiet right now because it does not have initiative sellers, or it does not have initiative supply in the tape, right? But that will change when supply comes in a initiative fashion, or initiative supply comes into the market. When initiative supply comes into the market, you can say that the market has been trading in about 40-point ranges for about 4 hours. But when initiative supply comes into the market, those 40 points can get covered in 4 or 5 minutes also, right? So that is the impact supply can get. And we'll be looking to see if some supply can come back into this market below this VWAP zone, right? There is a lot happening in the market, and this is not the time to be thinking in terms of lateral movement or horizontally placed movement. The market is poised to go vertical, up or down. Whether it goes up, whether it goes down, I do not know. I'm a follower of data. I do not predict what the market can do next, because I do not know what the market can do next. But what I can definitely tell you, based on the process which we have, is that if the market sees IS3 initiative sellers over here forming, I want to take the side of initiative supply. I want to see if I get purple candles over here, initiative supply coming in an IS3 plus IS3. I want to position myself on the short side. On the other hand, if I see initiative buyers coming in, I want to position myself on the buy side, right? So this is okay what the tape is. There is a change happening over here. The purple and the green are almost merged together now. Look for the presence of initiative buyers or initiative sellers in the market over the next 2 hours, and that will tell you about where the market is, right? Now, broadly speaking, beyond okay today, the market okay is interestingly poised okay for the month of April. Okay, there is a lot, and I put out a video earlier, and it's still there okay on my YouTube channel, on our YouTube channel, where we spoken about where the market is expected to be, right? So that chart was the Nifty spot chart I had put up, and I just want to give a quick reference to it because it's got importance, it's got implication going forward. So this is for people who trade positional, and if you're looking at the market in terms of the longer time frame, this on your screen right now is annual or a yearly profile. 2024 is on your left, and this is okay what has been happening for the first 3 months of the year 2025. And I spoke to you okay when the market was here around 24,000, saying that this is a supply zone. Why is it a supply zone? Because max volume of 2024 was traded over here. Again, okay, this is the pink line, right? All these levels are market generated levels, market generated information. So as long as the market stays below this POC, which is around that 24,150 zone, there isn't a lot okay to make in this market in terms of the bullish upside. I am expecting 2025 to be a sideways year, and we'll be basically okay filling up okay, this zone over here. And we spoken about okay how this works out okay in various videos before. I would urge you okay to go through it. But 2025 is not a year to be fully bullish, and 2025 is not a year okay to be fully bearish. It's a year okay which is could be a consolidating zone where the market okay takes a range and trades okay to that range, right? And we're seeing evidence of that. February, we're seeing evidence of that already. February okay was a market which moved down. March okay was a market okay which moved up, and I was fully bearish, and I told you okay to hold shorts, hold those futures right okay till the end of February. End of February, I told you okay that the market okay was gonna go up, and up it went. We finished March at the highs. For April, I'm expecting okay the market okay to go sideways. This is based on current evidence, and we could be okay in a sideways pattern in the series of April, in the month of April. This is purely data and is valid as long as this current data holds. But when data changes, you and I as traders should be flexible to make changes also. We cannot live in the past as derivative traders because this is a market which is leveraged 75 times to 1, right? So that's your Nifty future contract, right? So 1 point move is actually not 1 point, it's one point times 75. So you've got to okay take information which is coming at you on a scale of 1:75, which means that for a stock holding, if you are holding okay say something like a 3-day thing, or you're holding a stock for a 3-month thing, a derivative thing okay is 3 months divided by 75. You've got to be faster. Your decisions have to be 75 times faster also. You cannot use the mentality and the mindset of a stock trader when you come into a derivatives market, because the derivatives market is highly leveraged and primed that way for you okay to be a little bit more decisive, and not little bit, 75 times more decisive than you would when you are trading any stocks, etc. Right? So the important thing over here is when you're approaching the derivatives market, do not live in the past. Okay, stay alive okay to current information, because the current information which is coming to you is going at a rate of 75 times. So it's not a 1 point move, it's a 1 point move times 75. That's okay the size okay which is being traded at the moment. And these are the people who are trading currently. They are the ones who are moving prices, and they are the ones okay who move prices based on the kind of volume they are bringing into the market. And that buying, that selling which is done through volume is the one okay which is moving markets, right? So just be a little bit careful about how you are approaching this. I feel that this is poised for a move. We are creating value sideways, and this could shoot up or this could shoot down. I don't know where it is going to go from here, but if it is shooting up and you see IB patterns, what do? You buy longs. If it's shooting down and you see IS patterns, what do? You buy shorts. It's as simple as that. The process is simple. Okay, the complexity is in the way we understand it as an information. Right? So I leave it over here. I leave it over here. There is still a settlement happening and a lot okay to trade for the rest of the session. Keep this chart open, the NTM volume chart, and keep an order flow chart open right next to it. Between the two, you have evidence of what the market wants to do. The futures and the options together will tell you okay what the market okay wants to do. If you're keeping this futures chart open for this particular tab, I would recommend okay a 30-minute time frame. Right? I'll just quickly pause. I'll quickly pause, and if you got any questions, okay, please feel free to ask. So the question is, the new NTM volume X charts display weekly contracts or monthly contracts. They display the current weekly series. So that's the 3rd of April. That's on screen. So the second question is NTM says buyers are intact while order flow shows red spot and no demand. Order flow is also flat over here right now at 319.1. So that's why the market okay is kind of flat. So what you're looking for is this one. This has to be okay a big positive number, and it's going to be market moving when it reaches a zone of say 8,000 or 10,000 or one of those 5-digit numbers. That's a time. So it's kind of flat over here, and the market is actually kind of flat over here. Not much happening. Not much happening over here because there is no initiative traders in the tape. This is all responsive demand, responsive supply, which is coming up over here, right? But just to answer that question about the option chart and the futures chart, the best trades and the trades okay with about 96% probability are going to be when the option market and the futures market are together. And there would be situations where the option market okay sends a voice and the futures market sends a voice, and those two voices may not align. Right, those are the kind of trades okay which you would take, which will have about a 55 to 65% probability. But the better trades will be the option market and the futures market sending the same information, sending the same signals, and when they do, you would have okay those trades which are going right. So what I want to see, if I'm seeing an IS over here, I want to see okay supply side okay over here dominating, and not just okay by a small way, by a big margin. So this has to be way up and the green has to be way down, and the differential between the two has to be large for me to know for sure that supply is coming into the market in a very, very big way. My view on Bank Nifty is the same. The Bank Nifty order flow and the profile okay is on screen. Let me just pull up that market profile chart of the Bank Nifty. So what we're looking at in the Bank Nifty is a move okay which has come down to that previous month's weekly profile. So you always have to use a top-down approach. So the Bank Nifty is come back okay to where this VPOC was last week. So this is okay where it is traded, and today it's here. So we did make it a point to mention in the morning that it's gone above the VWAP of yesterday, and as long as it stays above this VWAP, you can say that this is about 51,400 level. As long as it stays above this VWAP, okay, it's considered okay to be positive. But there is a lot more of supply, okay, which is coming into this Bank Nifty futures up over here. So the VPOC is also moved up, and those longs, okay, which were built up in the morning, they are all taking profits out over here. But currently, okay, it's not a short yet. It's not a short. It's just a question okay, of whether supply comes back into the market. You will see decisive supply okay if this 51,400 breaks for any reason later in the afternoon or even tomorrow, and then okay you could say that the market is going down. So expiry days good. So the 30 minutes, okay, is a broader time frame because everything in market profile is structured on a 30-minute time frame, and that's the chosen time frame for a lot of traders to understand the bias of the market. You can choose any time frame based on your convenience or your comfort or how you see the market. I trade, okay, the trade and I action, okay, based on the 3-minute time frame. If I get an IB signal on a 3-minute time frame, I'm ready, okay, to act long in that signal. The 30-minute is used to arrive at the bias or to see a shift in the market sentiment, right? So it's almost about 1:30. We have 2 hours into settlement. The view over here is if this VWAP holds, which is around this 23,350, and we don't see a lot of supply, we could, okay, close out over here. I'm not wanting to build longs over here yet till we take out that VWAP of that seller around that 23,430, 440 zone. So this is the zone, okay, which I have marked out for long into tomorrow. Till the buyers do not take out this VWAP of the supply, which is the 1st of April profile, there is no case, okay, to build an immediate long out over here, right? And the second level, okay, which was given is that 2280, where the previous demand had entered. If you break below it, yes, okay, you have evidence, okay, to short back into the market. The current market, because VWAP and DPOC is close by over here, you can say it's a flat market, it's a writer's market, and there's nothing to do in terms of a directional bias over here, right? So I'll close it over here. I close it over here. Keep, okay, these charts open. Only thing, okay, which I would urge all of you as derivatives traders is to keep data up and center. That's your first priority. Always trade on actionable information, live data. What has happened in the past is gone. What's going to happen in the future, we do not know. But what's happening right now in the current moment, okay, that is where the future lies. Okay, the past is no longer important. The current data is the one, okay, which is going to create the future you would see on your charts. The better you get at reading current information, the more, okay, you would be making in terms of profits from the market. So I'll sign off from here, guys. We have a settlement to be taken care of. We'll see, okay, how the settlement, okay, rolls in. And I wish you the best. If there's anything else, okay, please, okay, do drop a Twitter DM or an email. Thank you all for joining in. I'll see you around soon. Thank you.